Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do basically top-down analysis of different financial assets using pure price action trading strategies. So today we're going to be looking at a Forex currency pair GBPCHF. So that's the pairing of the British pound against the Swiss franc. So without wasting much time, let's get into it. So like I said, I use pure price action trading strategy using three basic tools. That's trend line, support and resistance, as well as Fibonacci retracement tool. So, and I like starting my analysis from the higher time frame, where I try to work down to the lower time frame for trading opportunities. So we're currently on the monthly time frame in this currency pair, and the uh, much the basic information we can get just by merely looking at the chart is that for a very long time, this particular currency pair has been trending downwards. Now, how do I mean? I can say that price came down, made a lower low, lower high, 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 lower low, made a lower high. But if I zoom in, we can see that after making this lower low, it made a lower high, ranged the Y, and came back to the same level, making like a sort of what? Double bottom. Now, for those that have been following me, you know that what we mainly try to achieve with the monthly time frame is to get our directional bias. Now, because price came back to the same price level, and it's being rejected, that means my initial bias would be that price is trying to pull upwards, either to make a retracement to this level, either to make a retracement to this level before continuing downwards, or to come back to this um, resistance level. So basically, the bias that I'm having just by merely looking at the monthly time frame is that even though price has been in a downtrend for a very long time, but buyers are currently trying to push price upwards from a very, very strong key point of interest. And why is this a strong key point of interest? Because in the past, it has proven to support price from going downwards. So you can see price was rejected from here, rejected, 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 and is currently being rejected. So severally, this zone has proven to be a strong support zone. So my directional bias would be buyers in this market pushing the price upwards because this is the monthly time frame. So to get a clearer picture, we'll go to the weekly time frame. Now on the weekly time frame, we have more candles and sort of more information. And just like I said, this is a very strong key zone. We can see that price was rejected here, rejected, rejected, rejected. And now we have something like what? A double bottom, which is what what we try, just like we get directional bias on the monthly time frame, on the weekly time frame, we try to get like a structural bias. That's more like a pattern to trade. Like is there a chart pattern that jumps out to us? And in this case, we have a double bottom. And what does a double bottom indicate? It's a bullish reversal pattern. In other words, when we see a double bottom at a key point of interest, it's an indication that there is a strong probability of price going upwards. And of course, just to support this particular chart pattern, we can see that we have also like a bullish engulfing candle, which is this big green candle covering totally the red candle. And this showed that this supports our initial take that our directional bias from the monthly time frames at price is about to head upwards. And of course, to trade a double bottom, all we need to do mostly is to wait for price to break this neckline. Now, there's a neckline. So this is the left bottom, right bottom, and this is the neckline. So normally, all we need to do is to wait for price to take out this neckline. So we wait for price to take out the neckline, make a retest, and go upwards. However, because we already have like a bullish engulfing candle. Let me take this out. Because we already have like a bullish engulfing candle, and we can see that price is retracing back into the green candle. That means we can possibly on the lower time frames look for buying opportunities. Now, this is a weekly time frame, so it wouldn't make sense to start placing trades on this time frame. But for us to have a reasonable stop loss, so we have to move further to the lower time frame, and that takes us to the daily time frame. Now, on the daily time frame, just like I said earlier, I use three basic tools for my analysis: support and resistance zone, trend line, and um, Fibonacci Retracement Tool. Now I can take this out because they've served their purpose, sort of. Because now on the daily time frame, what we basically do is to concentrate on the most recent trend of the market. So we say that the monthly time frame gives us directional bias. The weekly time frame gives us like a chart pattern or a structure of the market to work with. The daily time frame tells us about the immediate happening, the most recent happening in the market, and that's like the immediate trend of the market. So if I'm to take this out, I can bring in a trend line here. So we see that while the market was coming downwards, the most recent trend line had just been taken out, while the first touch of the trend line, the second touch, on the third touch, the trend line broke. And if I'm to zoom in closely, I can see like another meaning double bottom, which supports our initial take of the larger double bottom that we got from the. So sorry about that, like I was saying. So now I can spot another double bottom, which if I map out clearly, this will be the neckline. And then I can now bring in my Fibonacci retracement tool. So we can see that the Fibonacci retracement tool is clearly aligning the Fibonacci retracement to golden zone, which, like I'd always stated, is the zone between the 60% and 61.8% mark, is clearly aligning with the neckline of our double bottom. So this gives us more confidence in the confluence that we've drawn. So we can see the trend line broken, currently trying to retest the trend, market trying to retest the trend line and coming into our Fibonacci retracement zone. So this gives us a very, very strong confluence. So the question would now be, how do we take advantage of this setup, as I always say? Now we can see that buyers are trying to push price upwards. However, it will be best for us to allow price to come into this key zone that we've drawn. So I'll go to the H4 time frame and see what price is doing. So on the H4 time frame, this is the double bottom that we spotted from the daily time frame. This is the neckline that was broken. Price is coming back into it, and we can see that price is making lower lows and lower highs, lower low, lower highs. So if you ask me, I would say that my advice would be to patiently wait for price to come into the zone, and then we wait for what change of structure or change of trend, and then we take our buy trade. So this is my take on this particular currency pair, GBPCHF. So if you come across this at any time, you can patiently wait and compare this analysis with yours and look forward to taking profitable trades. So, and like you know, one of the easiest model in taking trades would be to impute a counter trend line. In this case, you can draw this from here. So when price gets to break this trend line and makes a retest, to be a good time to take your buy trade. So this is my take on this particular currency pair. And like I said, you can always compare this with your analysis. And if you're coming across this channel for the first time and you feel like this what you see here, does this style of analysis make sense to you, you can click on the subscribe button for subsequent videos. And if you're looking to take your trading journey to another level, you want to learn how to analyze the market skillfully like this, we do a mentorship program and you can always reach out to us via the link on my YouTube bio. We also offer account management services. So when you reach out, we can discuss the details of that. Thanks to everyone that have been supporting this channel. I see the channel growing every day. I'm super grateful. So cheers and enjoy the rest of your trading day.